stocks rally as economic recovery optimism grows. In recent weeks, the stock market has seen a surge of activity as optimism surrounding the economic recovery grows. Investors are feeling bullish about the future as COVID-19 vaccines continue to roll out and businesses begin to reopen. The Dow Jones Industrial Average, a key indicator of the stock market's health, rose by more than 500 points on Monday, March 20, reaching a new all-time high. The S&P 500 and Nasdaq also saw gains, with tech stocks leading the charge. One of the driving forces behind the recent rally is the $1.9 trillion stimulus package that was recently passed by Congress and signed into law by President Joe Biden. The package includes direct payments to individuals, extended unemployment benefits, and funding for vaccine distribution and other pandemic-related expenses. Investors are also optimistic about the prospects of a strong economic recovery, with many expecting a surge in consumer spending as businesses reopen and people return to their normal routines. This optimism is reflected in the strong performance of stocks in the travel, hospitality, and entertainment sectors. However, there are still concerns about the ongoing pandemic and its impact on the economy. The recent surge in COVID-19 cases in Europe and other parts of the world has raised fears of a possible fourth wave, which could lead to renewed lockdowns and economic disruption. Despite these concerns, many investors remain bullish about the future and are continuing to invest in stocks. With interest rates remaining low and the economic outlook improving, the stock market could continue to see gains in the coming months. As always, investors should proceed with caution and do their research before investing in any stocks. While the recent rally is certainly cause for optimism, there are always risks involved in investing, and it's important to have a well-diversified portfolio that can weather any potential storms. Next newspaper. The stock market has been in the news a lot lately, with volatile swings in prices and concerns about the economy. Investors are wondering what's next for stocks, and whether it's time to buy or sell. The stock market is a complex system that reflects the health of the economy, as well as the performance of individual companies. When the economy is doing well, stock prices tend to rise, as investors are more confident about the future. Conversely, when the economy is struggling, stock prices can fall, as investors are more cautious. One of the key factors driving the stock market in recent months has been the COVID-19 pandemic. The pandemic has had a major impact on the economy, as businesses have been forced to close or limit operations. This has led to a lot of uncertainty and volatility in the stock market. Despite these challenges, there are still opportunities for investors in the stock market. One strategy is to look for companies that are likely to do well even in a tough economy. For example, companies that provide essential goods and services, like healthcare or food, may be less affected by economic downturns. Another strategy is to look for companies that are likely to benefit from trends that are likely to continue in the long term. For example, technology companies that are developing new products or services may be poised for growth, as more and more people rely on technology in their daily lives. Of course, investing in the stock market always carries some risk. Prices can be unpredictable, and there are no guarantees that a particular stock will perform well. That's why it's important to do your research and consult with a financial advisor before making any investment decisions. Overall, the stock market is likely to remain a key part of the economy and a source of opportunities for investors. Whether you're a seasoned investor or just starting out, it's worth keeping an eye on the stock market and considering the potential opportunities it presents. Next newspaper. Stocks continue to rise as investors remain optimistic. In recent weeks, the stock market has experienced a steady rise as investors remain optimistic about the economic recovery. The Dow Jones Industrial Average, DJIA, closed at a record high of 35,000 points last week, while the S&P 500 and Nasdaq also saw gains. Analysts attribute the recent surge to a number of factors, including the rollout of COVID-19 vaccines, an improving job market, and increased government stimulus spending. Additionally, many companies have reported strong earnings in recent quarters, fueling investor confidence in the stock market. One industry that has seen particularly impressive gains is technology, with companies such as Apple, Amazon, and Microsoft all reporting strong quarterly earnings. The shift towards remote work and online shopping during the pandemic has accelerated the growth of these companies, leading to increased investor interest in the tech sector. Despite the overall positive outlook, there are still concerns about inflation and rising interest rates, which could potentially slow down the economic recovery. Additionally, the ongoing supply chain disruptions and labor shortages could also impact future earnings for companies. Overall, however, the stock market remains a promising investment option for those looking to grow their wealth in the long term. With the ongoing economic recovery and the potential for continued government stimulus, many investors are confident that the market will continue to rise in the coming months. Next newspaper. Stock market soars as investor confidence grows. The stock market experienced a significant surge today as investor confidence continued to grow. The Dow Jones Industrial Average rose by 2.5%, while the S&P 500 increased by 2.1%. The Nasdaq Composite also saw gains, rising by 1.8%. Analysts point to several factors that contributed to the market's positive momentum. First, the Federal Reserve's decision to maintain its accommodative monetary policy has helped to keep interest rates low and stimulate economic growth. This has been particularly beneficial for the tech sector, which has seen strong gains in recent weeks. Second, there is growing optimism about the prospects for a post-pandemic economic recovery. With vaccination rates increasing and lockdowns easing, businesses are starting to reopen and consumers are beginning to spend more. This has led to a surge in demand for travel, hospitality, and other sectors that were hit hard by the pandemic. Finally, there is also renewed optimism about the prospects for a bipartisan infrastructure bill. President Biden's proposed $2 trillion plan would provide significant investments in areas like transportation, broadband, and clean energy, which could help to boost economic growth and create jobs. Despite the positive momentum in the market, there are still risks to consider. The ongoing pandemic remains a significant threat, and there is concern about the potential for inflation as the economy continues to recover. Additionally, geopolitical tensions and other unforeseen events could cause volatility in the markets. Overall, today's gains are a positive sign for investors and the economy as a whole. With continued support from the Federal Reserve and the potential for further economic stimulus, the stock market is poised for continued growth in the coming months. Next newspaper. Stocks continue to rise as economic recovery takes hold. Investors are feeling optimistic as stocks continue to climb in value, fueled by a strong economic recovery and increasing confidence in the business world. This comes as welcome news after a tumultuous year in 2020, which saw many stocks plummet due to the COVID-19 pandemic. The Dow Jones Industrial Average rose 3% this past week, hitting a new record high of over 33,000 points. The S&P 500 and Nasdaq Composite also saw gains of 2% and 2.6%, respectively. This is largely due to positive economic indicators, including a decrease in unemployment rates and a rise in consumer spending. Many analysts attribute this recent surge in stocks to the passing of the American Rescue Plan, a $1.9 trillion stimulus package aimed at providing relief to individuals and businesses impacted by the pandemic. This package includes direct payments to individuals, extended unemployment benefits, and funding for small businesses. However, not all sectors of the stock market are benefiting equally. While technology and healthcare companies are experiencing growth, other industries such as energy and financial services are lagging behind. This is due in part to concerns over inflation and rising interest rates, which could negatively impact these sectors. Despite these concerns, many investors remain bullish on the stock market, believing that the economy will continue to improve as vaccinations become more widespread and businesses begin to reopen. This optimism has led to increased demand for stocks, driving up prices. As always, investing in the stock market comes with risk and should be approached with caution. Experts advise diversifying one's portfolio and seeking the advice of a financial professional before making any investment decisions. Overall, the current state of the stock market appears to be positive, with many signs pointing to continued growth in the coming months. Investors will need to keep a close eye on economic indicators and company performance to make informed decisions and capitalize on opportunities.